Okay, I think we're live.
Live, live, live. Good evening. Good evening, Dan Cooper. Good evening to all the Dan Coopers out there. I too sometimes am Dan Cooper.
Okay, hello to everybody who's joining us tonight. It's our monthly live investment seminar, and really the whole focus here is just to bring the latest and greatest tidbits to you from a real estate perspective, and also talk about new projects that we're working on, because there's so many people that are really geared up to do something in real estate right now and take advantage of the market at large. So we like to talk to it and just bring in, resident experts to lend their expertise so everybody in the trenches can get something out of this. So tonight we're going to talk about more or less a state of the real estate union up to the beginning of October, because a lot has happened in the last month.
For sure.
So my guest speaker tonight, as you can see in your screen, is Simeon Papailias. He is the managing partner for REC in downtown Toronto. Very involved on the development and resale of not only pre-con, but just a lot of real estate. And so he's involved and connected with the people that we all need to be connected with so we can make smart investments. So to that end, I mean, Simos, I'm just going to start off and use the words, the real estate is on fire. I mean, hello, since July, right?
It truly is, Dan. And we just finished doing a couple interviews last week with both the Globe and Mail and Bloomberg, just commentary basically on how everybody's trying to figure out why the Canadian real estate market can be so resilient, and what's driving it. And was it pent up demand? Was it are Canadians just crazy, or is our banking system some kind of a magical safe haven? And I think we had a conversation earlier today, kind of going over the market stats and taking a look at how to best present to our audience tonight the true story of what's happening in the marketplace. Because I think the best way to move and look forward is to take the best information from the past. In looking at the activity in the last 2-3 months, I think there's a story that's easily told there. So I'm looking forward to you covering that those market stats with your audience, and so people can truly understand where we're heading.
And I think you said some of the very, very correct terms, and you said pent up demand. Yes, we've got good job growth going right now, and I guess the big word is confidence. And we have not had confidence in the marketplace for a while. It's been okay, but it hasn't been great. And we've had our share of obstacles over the years. It all started with the foreign buyers tax back April 20th, 2017, and since then we've had multiple interest rate increases. Then we had the stress test in January of 2018, and then still a flat market after that for sure, right through 2019. And then lo and behold, we get COVID. So at that point, everybody was scared of their own shadow for good reason. So the spring was a bit of a wash. I mean, it was kind of cool because every real estate agent, all 55,000 of them in the Toronto Real Estate Board, I hope, were at home retooling and getting themselves into the next gen, like digitizing, taking advantage of technology and learning how to sell real estate as virtual as we can. So, tonight we're going to take, I don't know, let's say 30 minutes and probably just discuss the essence of the market, how well it's doing. And then I want to get into some projects with you, because you've got a lot of great real estate projects. And I don't want to jump ahead, but last month we talked about a project right in Oakville called Dunn West, only 135 units?
It was about 135 units. The project was by Green Park, which is a very established and well-known and well-liked developer. They sold out in a week. And of course, we had access. Many of our clients were able to get in, but many clients who kind of really needed to understand it more or think about it for whatever reason, or if they just didn't have faith in the marketplace at the time, missed out. And those prices are already there. There's deals happening on the sidelines for 50, 100,000 more than what people bought them for. So there's a massive demand for Oakville real estate right now.
Yeah, I mean, that's pretty cool. So that just kind of drives the point home that I guess the focus, what we're trying to do here is get the best product at the very beginning at the best terms and rates. And, the fact that we can get a deal, if not free parking, we can get rental guarantees, so on and so forth. And again, the fact that it sold out in the first week, what does that tell you? So everybody that bought into that project last month, and we had the inside track on that, has made money already. And, if you just look at the fact that you're right, we have uber low inventory right now, which really leads to high competition amongst buyers, resulting in inflated offers. In fact, last week I was representing a young couple, their first purchase. We went in on a very small detached, and it was just under 800,000. And get this, they're holding offers, as everybody does now.
Yep.
20 offers. And we were well over 100,000 over the ask, no conditions, bank draft in hand. Didn't matter. We still got blown out of the water. There was 4 offers, still better than ours. It sold for 52,000 more than we were prepared to pay. So that shows you the confidence and the fact that people not only want to get downtown, but they're getting out of the density to a certain degree, and they're moving out to the 905 because
so that's a big story right there, because one of the articles that we covered last week was the one that the market is red hot in especially the 905s. Oakville is actually the market leader in the entire GTA with an 18% year over year appreciation. 18%. We're talking about $250,000 for the average home price. So there's not a lot of people that can net $250,000 in a year. There just isn't.
Right.
That means you're making 500. And if the average Canadian household is doing about 100K for 2 people combined, we're talking about 1% of maybe the top 5%. So that's the kind of market that you operate in. That's the Oakville and Burlington market is that's the story of what's happening there. Mississauga, where I live, I practice in Toronto. I live in Mississauga. I'm at Britannia and Creditview. Our market is up 17.5. But so it's the same story. But as far as statistics are concerned, Oakville was the market leader for the GTA with an 18% upswing in trajectory, which is just mind-boggling. There's nothing else to say.
I mean, your average sale price right now is just under 1.2 million.
Entry. That's to get into. That's the average, guys.
Yeah.
That's the average. So if you want to get into Oakville, you're looking at a 1.2 million ticket of entry. It's an incredible market.
Yeah, those are huge gains. And so, I mean, it just adds, fuel to what we're trying to say here. And, basically the fact that the market's performing so well and interest rates are going in the direction an investor wants to see, because right now you're well under 2%, in many cases you're 1.5, 1.6, 1.7% on 5-year fixed money. So everybody needs to learn how to leverage and take advantage of this and have more than one real estate investment in their portfolio.
100%. And that's the biggest takeaway. Like right now, the story, I'm going to share anecdotally something very, very important with your audience is I've created in the last 3 months, just from the investments that I do have mortgages on, I've refinanced 3 in the last 60 days, with Scotiabank. All were in the 2.8 to 3.5, which is already ridiculously low. I just refinanced 5-year fixed at 1.8, 1.9, and 2.05 respectively for my investment property. So my investment property is now 5-year fixed at 2.05. One of them in Toronto. The other one, 1.9 and 1.8. I just made $1,000 in cash flow without doing nothing. I didn't paint them. I didn't re-tenant them. I didn't do anything. Just by rewriting the mortgages, same term, different interest rate. So, same amortization. So I didn't re-extend the terms to make my payment lower. So on those specific ones, there's 20 years left on all 3. And I made an extra $1,000 in my pocket simply for rewriting the mortgages. If you're sitting on a mortgage that's expiring, that needs reissuance over the next 6 months, call your bank tomorrow morning. Get that line of credit at 2.25. Refinance that mortgage at 1.9. It's going to put money in your pocket for doing nothing.
Yeah.
It's huge. It's just massive.
And the beautiful thing is, if you have investment real estate and you're renting, well, obviously that market's very tight right now. So since there's so little inventory, then it's tight on the rental side too. So anything that you do buy is easy to rent. Rents are up, mortgages are down, and it's a beautiful thing for someone who's looking to invest. So I mentioned, that Dunwest sold that fast. That was last month, so it's gone already. So I know you're on some, many different projects. I want you to kind of cherry pick tonight, just for the people who are listening. Maybe let's talk about 2 or 3 projects. Maybe start off with, I know you got something new at Kingston Road. It's the Manderley. Why don't we talk about that for a minute? Small boutique. I think it's 12 stories.
Yeah. So the Manderley is a great little project. It is 198 total units, studios all the way to 3 bedrooms. The 1 bedrooms are starting in the 400s, and you're talking about geothermal system, in-suite, energy efficient, year-round, independent controls. So if this is going to be an investment unit, you're going to have a very, very low carrying cost, because your condo fees and your maintenance fees are going to stay nice and low. And those units have at least a 20-year life, the ones inside your unit. So we are talking about a really crucial area, because it's right across the street from the Scarborough Hunt Club on Kingston Road.
Oh, nice.
It is a mid-rise boutique style building with less than 200 units, with a great variety of suite types. So it's not going to be a frat house downtown, meaning it's 80% 1 bedrooms and single people living in. You're going to have a great tenant mix. You're going to have a good owner and end user mix in the building. So this would be a long-term hold type product. This isn't one you're going to flip. This is one you're going to hold throughout, and it should perform really well over years to come. So great cash flow.
You're 2 minutes from the lake there too, and the Hunt Club's got a golf course too, right?
You're literally 2 minutes from the Bluffs. Like the Bluffs is down the street, so it's one of the most picturesque part of the east side of Toronto, going to Scarborough, and you're literally a 5-minute drive from the GO train and subway, which is at Main. And you're a 15-minute drive down Kingston Road to downtown, should you choose to drive. So there's lots of options for transit as well.
Yeah, you're very close to the beaches, like 2 minutes, right?
Mm-hmm. That's exactly it. So there's that project. That's a great project where we have a good allocation, and we can pretty much get exactly what we want for our clients. We just last week we started working on QA condos. Again, the lower east side of Toronto. So it's across the DVP into the beaches area. So
right?
Sorry?
Queen and Ashbridge.
Queen and Ashbridges, you bet. So it's literally at that corner. It's at the intersection of Queen and Ashbridges. So it overlooks the green space that goes all the way down to the boat launch, and in Ashbridges Bay Park. So there is nothing ever going to be built to your south, because that's a protected pedestrian park, skate park, etc. And on Queen Street, you're literally 5-minute walk to the beaches or 5-minute walk to Leslieville, which are both arguably right now probably number 1 and 2 of places to live in Toronto. So it's a hot project. We definitely have access there. We have great friendships with both the developer, which is RioCan, which is Canada's biggest REIT. This one specifically has come outside the box, and it's the very first time I've ever worked with a project where your deposits are earning interest while you wait for your condo to be built.
What interest rate?
So 6%.
6%.
It's exactly like investing into a REIT. It's unbelievable.
Wow, it's like getting a stock and getting a dividend.
So not only are you locking in your price and riding the appreciation of the Toronto market, you're also earning a 6% interest rate on the money that's on hold. So it's an unbelievable double dip, and it's only doable because RioCan is the builder. RioCan is floated by, it's a public company, it's a public REIT. So if anybody wants to look up RioCan, they can. But we have tremendous relationships there, and we're able to get that in. So if any of your audience is interested in looking at that opportunity, I would say they would have to act pretty quickly.
So how many units and how many floors in that building? Just
over 300. It's also mid-rise. You can't build that high because you're so close to the water table, to the lake. But it's out more. It's a massive. It's a good project. About 400 units, I believe, not 300. Just under 400. 50,000 square feet in amenities for the tenants and end users. unbelievable co-working spaces. Because of COVID, they've redesigned the whole amenity space to accommodate that work from home environment, and avoid, of course, having to leave as much as possible.
Now, the cool thing is that, the listening public won't get is the fact that you've spent years developing relationships with the big boys to the point where you're getting, a much better deal. Talk about some of the perks that are like special to you and I.
Yeah, first and foremost is the deposit structure. That's probably one of the biggest ones because it factors. It's going to be the make it or break it for most people. So if I were to say, like, what differentiates pre-construction to resale is the fact that the investor for resale is going to have to come up with 20% tomorrow morning in order to close on the deal. In this case, you're going to put down 5% now, 5% next year, 5% the year after, and break it down. A normal broker would have access only after we're done. So basically, our clients and our investors go in first. We get first pick of the litter. So we're going to pick the best units in the building. We're going to have and enjoy the best deposit structures. We're going to have discounts and cap development charges, which is huge. The assignment to flip our paper, meaning the free assignment clause, as opposed to paying $5,000 for it. Yeah. Everything is crucial. The right to lease during the occupancy period. So all the minutia and all the fine print that people don't know about, they get stuck into these contracts, is the stuff that we negotiate up front for our investor clients. So there's massive benefit to it.
Yeah, yeah. And what about parking and, say, lockers?
It depends where you're buying. I mean, if you're going to buy a QA, I'm not sure if parking would be a great investment, to be honest with you, because you're so centrally located. So when parking now costs an average of 75 to 100K a spot in the city of Toronto, would I say it's a great investment? I would probably say no, because you're not going to get the rent to cover that 100K. If you're buying a 2 or 3 bedroom, of course you need to get a unit because you're going to have either a small family or two people living there that one of them may have a car. But if you're looking at that 1 bedroom, 1+ den, junior 2 bedrooms, I don't think parking in the Toronto investing market would make sense. When you get out to the Kingston Road, like Manderley, yes, there you're definitely going to buy a parking spot because your tenant 80% will have a car. Mm-hmm. So you got to be smart about it. You got to understand who your client is. So as an investor, your client is your tenant. Mm-hmm. Just like our client is the investor, and we have to give them the right counsel to get the right unit for them, for their goals.
Now, there's one other project that there's been a lot of press on is Artform.
You bet. Yeah, so we placed already over 30 people into Artform. Emblem Developments, so Cash Pushatan is the CEO of Emblem Developments. And Cash is a dear friend of the REC. He runs a family office, so he's a Bay Street guy for the last 15 years, and he runs one of the most successful family office practices probably in the country. They have over $1 billion in assets under control, and he represents families, both Canadian families as well as some Middle Eastern assets under management. And they're so liquid where now they're making their transition from Bay Street to Main Street via real estate. The first project, which is Artform, is centrally located in Cooksville in Mississauga. Cooksville, if your audience knows Mississauga, is one of the original and oldest places in the city. It's centrally at Dundas and Highway 10, here Ontario and Dundas. And it's probably the most undervalued asset in the city of Mississauga. It just kind of got forgotten. The Caniff family really took that whole area over. That's where they made their bones and they became what they became. So if anybody follows, I don't assume people follow real estate as passionate as we do, but Caniff Properties and Caniff Golf Courses, that family built half of Mississauga.
Yeah.
And if you look at Dundas in Highway 10 today, you're going to see at least 30, 40 old 1960s apartment buildings that all have the Caniff flag on them. So sorry, go ahead.
Iggy Caniff back in the day.
Yeah, you bet. So what you see now is a transition is starting to arise, where the used car lots used to be just south, where the small industrial plazas and the small retail plazas that now look like crap are being scooped up by developers and being repurposed into what they're calling, in many cases, Square One South, because it's directly tied to Cooksville Station. So you have GOAT train, LRT, and buses within a 2-minute ride to Cooksville Station. So it's extremely well located. You have a hospital within 5 minutes, Square One within 5 minutes, tons of educational facilities right around, retail shopping, big box shopping, highways. So Mississauga is, again, 18% year over year. It's for a reason. There's a reason all this development is going in, because there's massive infrastructure, and Art Form is an extremely strong developer, very liquid developer. So they're going to put together a great project. And Art Form Phase 2 is going to be launching within the next 90 days. So that's also, even if you buy in Phase 1 right now, you better be ready to get into Phase 2 as well, because now you're creating your own destiny. So you're creating the value in your investment and in the area.
So I don't know. I mean, it's a big city. It's a big geographic area that basically goes from, the east side right over almost to Niagara Falls these days. There's no break in between. So I guess, the tip, it's obviously location, but it's being walking distance to the transit. That's the big deal.
And that's always been the case. So there's been study after study. I mean, transit drives real estate. And that's, when we talk about transit, we're talking about government infrastructure. When the GO train expansion happened from Oakville all the way to Niagara Falls, so we've watched values rise there. So the minute that announcement came in 9 years ago to today, there's been over 120% appreciation in every single community down the route. I'm talking from Hamilton to Stony Creek to Wine Country to St. Catharines. Every stop along the way has seen massive change in real estate values and massive change in the demographic that make up those communities. So somebody in Toronto or somebody in Oakville can sell the house that they bought for $200K for $1 million, go to St. Catharines now to retire and buy a big, beautiful home for $500K and have $500K in the bank.
Jesus, you can live on the lake there for probably $500K.
And maybe not anymore. But funny enough, not anymore. But that's where that's moving. And it's only real estate that can afford people that type of opportunity. Yeah. Where no matter what you've done in your life, whether you were a saver, whether you weren't, if you just owned property, you have options available to you that nobody else does.
Yeah, I think back, there was a condo that I helped my daughter out with. We bought it on paper 4 years ago, and it was in no man's land at the time, basically Dufferin and Eglinton. But the cool thing is, Eglinton, just west of her building, you've got the whole hub, that transit hub being, the whole infrastructure is being redone within the next few years. So right outside of her condo, which she's living in now, she just moved into it, is the Oakwood subway station. It's right at her door. So as soon as I looked at that from her balcony, I just went ka-ching, ka-ching, like that's $100,000 right there.
Correct. And it's truly unbelievable what that does to your absorption rate. So for example, when she moves out of there and she decides to rent that unit out, the chances of her renting that unit for price X versus the condo being off transit, and it's going to rent for price Y. We're talking about a month in marketing difference, cost that comes with that, and of course the cash flow that comes with a property that's directly tied to transit. It's massive. It's always investing smart.
As I was saying, it's a big city. Do you see any? What's the best bang for your buck between, say, the 4016 and the 905 area codes, or does it really matter?
Of course it matters. Everything matters. Right now, all trends are following that you should be looking at the 905 first. 416 is the price of acquisition for land for these developers is so high. The time to put it through the city is so long, where the price is now, the average price for new construction in the 416 is over $1,300 a foot, making the entry level for a small one-bedroom condo $600K plus. If we're talking about your audience is looking to start investing in this type of product, I would definitely stick to the 905s, whether it's Durham or Halton or Peel. Actually, even Peel, like, unless you're looking at major projects like Artform, like Westport, like Pinnacle Towers, I have no issue getting into any of those. Like, I would put you into any of those projects because I know where they're going to go. I've personally invested in many of these projects. But as far as where to go right now and for the next 5 years, I think, and that's what you should always be looking at, is at least a 5-year window. That this pandemic has caused enough trauma to people's psychology, whether it's with or without confidence. People will prefer to be outside the concrete jungle of downtown Toronto. Mm-hmm. So I'm not saying downtown Toronto anything will ever happen, because it won't. It's just too many people to hold it up. But if you're asking me what I'm investing in today, I'm investing in the 905.
Wow. Well, it's true, because if I just look at detached sales in the 905 area code, just last month, year over year, they were up 63%.
Yeah.
So that's insane. Whereas the 416 was up 28%. So that kind of gives you some, credibility to what you're saying. So overall, the market's up over 50%, but 63% in the 905 area code. So,
and we're talking about sales volume. So what that tells you is that people are looking outside the core. Yeah. They're looking for a little bit more space. They're looking for a little bit more distance. They're looking for just quiet down. They're looking for that peace in their lives. And that cannot be overlooked. The way tenants feel and the way owners feel is the same. Everybody's feeling the same pressure. So that makes the 905 red, white, hot. It's where people want to be. They want to be able to go for a walk down the creek.
Yep. Yeah, it's true. So, especially being able to work remotely and virtually, like everybody is. Both my kids, that are both downtown, and they were both office. They were both in that office space, but both are working remotely now, and there's no plans for them to go back whatsoever. So, it's all up for negotiation. And you're right. So the 905, the rural has really come to life. So basically, there's a lot of projects right now that make sense. And so I'm going to make sure everything is posted on my website, but probably the best thing to do is for people to reach out to me direct and sit down and figure out what is best for them.
I definitely agree. We've established our practice the same way. Every single person on this webcast, the first thing you should do is take the moment and the time to have a half-hour conversation. You're not a hard guy to get a hold of. You're a very prominent figure in your markets in both Burlington and Oakville. I think having that sit down, that half hour, 45 minutes with your client to really understand what kind of risk tolerance they have, where they want to be. The market right now is and not right now, it's always filled with opportunity for guys like us because we go seek it. So the average, I'm not what I do is I'm not a regular residential realtor. I'm not at open houses on Saturday. So where I am on Saturday is I'm at dinner with Emblem CEO. I'm looking for always to have that inventory for us to be able to link to our clients, to our best clients.
Right.
So to have that half hour, 45-minute talk, to be in touch and in line with what your clients are looking for, I think is crucial. And the absolute starting point. I would say hands down, that's the best method of going about this. Inventory, we have tons of great opportunities. There is no lack thereof. We can get into some great stuff.
Yep. It's basically confidence. It's pent up demand, but the big bonus is we've got a lot of job growth coming into the GTA. It's the safest place in the country to invest right now. And with rates as low as you're saying, like 1, 6, 7, 8, it's free money. Like you want to borrow just to have a free mortgage. That's what it feels like. And then leverage and the whole beauty of compound interest comes to life. So it really is a no-brainer, but that's why I'm so passionate about this. And every month I'm going to spread the word so people can actually get that second and third property and develop wealth for their legacy. It's pretty simple stuff, isn't it?
100%. And not only would it be a good idea? I think anybody watching here should contact their bank immediately. Look at freeing up some of that capital. When you're borrowing at 1.9, you can literally put it under your mattress and it will make money. Like there's just so many things you can do with it. Get that line of credit. Get that. Get access to your capital, and we can definitely put that money to work and build that legacy that everybody's looking for.
Well, that's the nuts and bolts of it. I think that's as deep as I wanted to go tonight. I just want to make sure people know that there's probably a dozen properties that make sense. And basically, I guess probably the best way for me is just meet with dancooper.com. We have a website set up to communicate with people, and we'll book a time, and it's that simple. So Simos, I appreciate your time tonight. It's always a pleasure having you on because you're a freaking wealth of information. I really appreciate it.
Well, I'm always honored to be here. I wish the best of luck to you. I wish the best of luck to your clients. I want everybody to stay safe. Again, get in touch with me anytime any of your clients need anything at all. We're here for you, and we always will be.
Sounds great, buddy. Love it.
My man. Good night. Good night to all. Be safe.
Take care, man.